Welcome to the special focus on ZSE self-listing brought to you by Equity Access. We are joined by Justin Bgoni, the CEO of Zimbabwe Stock Exchange, to discuss the ZSE's historic self-listing on its own bourse through Zimbabwe Stock Exchange Holdings Limited. In this exclusive, we'll explore the strategic vision behind the milestone, restoring investor confidence and outlining future diversification plans, including the potential introduction of Bitcoin trading. Join us when we set for discussion on ZSE's path forward, informed by global best practices and local realities. Stay tuned.
Thanks, Bgoni, for giving us a chance to speak with you post your ZSE self-listing.
Thank you very much.
Now, the New York Stock Exchange is self-listed in 2006, but post-listing, it triggered a lot of governance concerns on its ability to self-monitor without bias. With ZSE listing, how are you going to deal with conflict of interests in self-monitoring, especially regarding the SECZ scrutiny of SI 147, which delayed the July listing?
All right. So, there are, as you said, we are not the first one to do this. So there are various models that you do to reduce the risk of the conflict of interest. The way we have done it with the Securities and Exchange Commission agreeing to it, as well as government, is that the Securities and Exchange Commission itself will be our regulator.
Okay.
So listed companies give us documents, but we give our documents to SECZ. So we don't regulate ourselves. SECZ is our regulator. So that's how we did the conflict of interest.
So now ZSE is now under ZSE Holdings and VFX as well.
Yeah.
So when Euronext listed, there was stricter financial separation of its bosses to avoid investor confusion.
Okay.
Now ZSE trading in ZIC and VFX in US dollars. How are you going to ensure transparent accounting, especially given that this is 166 million turnover, which was higher than VFX's turnover in Q2?
Okay. It's like that. I mean, we're a dual currency. I don't know if I can understand your question well. We're a dual currency country. You can use both currencies. And for us, I mean, which exchange does better just depends on what the public wants. I don't know if I'm answering you.
Okay.
Yeah.
Now let's go to the global stage again.
Yeah.
The Australian Stock Exchange, it funded platforms like Chess when it's self-listed, thereby boosting retail access. Now in Q2 with ZSE launching Data Direct and your revenue spiking by 53%, how will you allocate listing proceeds to scale up operations of ZSE Direct?
The why we did Data Direct is that Data Direct it helps people access our data easily. We have always had a problem where people are trying to access our data, and the way we were doing it was difficult. So Data Direct is just easier. And ZSE Direct, also VFX Direct, are our feature in terms of platforms for retail, and we have plans to grow it. There are various things that we have in mind. One of the things that we want to do is to increase our marketing of it. So you see going forward that there's going to be a rollout of marketing ZSE Direct and VFX Direct as an investment option for people. So that's one thing that we're going to do. Then also we're going to add more products around it. So you see us add more international products around, especially VFX Direct. So we really want to put a lot of effort in terms of getting retail onto our market.
Now let us look at NASDAQ. When it's self-listed, it diversified during streams through market data, thereby mitigating a 30% drop in listing fee. Now, with ZSE's profit plunging in 2024, how are we going to leverage the Q2's foreign investor turnover surge?
Okay. So in terms of diversification, just to come back to diversification is a key thing that we want to do in terms of our company. So if you say when NASDAQ did it, which was to go more into market data. I know that NASDAQ also went big on technology. And there are exchanges that use the NASDAQ tech. So that's how they diversified. We are thinking of diversifying a little bit more different. So the way we want to diversify is to make it much easier for companies to raise money on our platform. So like an SME exchange is what we're thinking about. We are thinking more to get into digital products, things like crypto on our PFX. Okay. That's how we are thinking of diversifying. So we think of it differently. It really depends on your country. I mean, NASDAQ has enough resources to come up with a NASDAQ tech that is sold around the world. We think we just must make it easier for companies to raise money, especially small and medium companies, and also make it easier for young people to get into digital assets. That's our strategy.
Now let's come back at home. When Johannesburg Stock Exchange listed, right? Its soft listing saw a 20% market cap rise.
Okay.
However, as for ZSE, market cap fell by 3% despite turnover growth.
Okay.
So how is soft listing going to catalyze a market cap recovery?
Okay, so I think it depends on which market cap you're looking at. Yes, the ZSE one is the one that came down, but the PFX one was up. So it was up and down. The whole thing that you need to look at in terms of this market is a long-term game. We don't think of it short-term. We're quite happy in terms of the interest that we're getting into the market. So if you look, the market cap didn't go up, but the activity went up. Yeah. So if you look at the first 6 months this year and 6 months last year, you'll see that our turnover has gone up double. It's double on the PFX, and it's 3 times on the double on the ZSE, 3 times on the PFS. So we are happy with what we are seeing. We think it will catch up later on. But you have to understand the main reason why you are seeing what you are seeing on ZSE is liquidity. There's problem with SEC liquidity in the country. It's not just us. And ask everyone, they'll tell you there's a problem with SEC liquidity. So we think it's also a function of SEC liquidity rather than the fundamentals. But we like what we're seeing because at least the turnover has gone up despite the SEC liquidity.
Now, in your Q2 newsletter, you touted about prospective issuers training program.
Okay.
Yet Truett's delisted voluntarily, raising some red flags. Now, my question is, how will ZSE counter delisting risks? And what lessons from the New York Stock Exchange post-2006 listing rotation strategies have you applied or you are planning to apply so far?
Okay, so listings are normal. So if you look at every exchange, you don't have the same companies being listed on that exchange. Companies come and go. So delistings are normal. So we look at it as something that happens. Companies come and go. What's important for us is to get new listings. So you see that we are getting new listings. It might be not all on ZSE, some of it on PFX, but as a market, we're getting more listings. So, for example, there was an Eagle REIT that got listed beginning of the year. You know that Kavango is in the market now. There is money to list. And we've got 3 listings that are in the pipeline that come to list. So for us, what's important is net listings. Getting more new listings more than delistings. Delistings happen. There's no, everywhere that you see in the world, there's a cycle in terms of the company. It grows, sometimes it comes and goes. So we are not worried about that. For us, what's important is to drive new companies to list. Hence the prospective issuer training program that we are having today. So what we know about prospective issuer training program is that we know that people sometimes don't understand how the listing process works. We still think that there's a lot of potential out there of getting new companies to come to our exchange. So we have got about 30 people today who want to learn how to list. So that's what we're going to concentrate on, help people learn how to list, and then they come to list. That's what towards delisting, it's not about the exchange. It's a function of the economy. It's a function of retail that is in trouble. So I think it's not about the exchange. What you really want is you want the new industries to come and list. So for us, where we see the growth in terms of property. So we know that there's a lot of property that's happening. So REITs becomes attractive in that regard. So what you want to see is more people, especially who are in property, to consider coming at least their properties REITs. That's what we are.
Now, thank you for that. Post-listing, a London Stock Exchange faced the pressure to prioritize dividends over infrastructure, risking long-term growth. So with ZSE's 2024 liquidity going down, right?
Yeah.
Your liquidity went down in 2024 and your liquidity ratio at 1.59. How will you allocate capital to sustain foreign investor momentum or investing in platforms such as ZSE Direct?
Okay. So, we have a dividend policy. It's around 20% of profit as there. We think it's good enough to do that and also reinvest. So I think we are comfortable in terms of where we are. And also, we are not leveraged as well. So we don't have a lot of debt on our markets. One thing that we can do if we wanted to grow is to borrow a little bit. So I think we're comfortable in terms of what we can do in terms of paying dividends as well as grow. We're comfortable. We are not under pressure to pay dividends, like LSE. No, our shareholders are saying that to us. They expect us to grow, also get some return. So I think that's the balance. That's what you do in our positions. You have to balance that growth and earning a return. But we're not under undue pressure. No, we're not.
So from our conversation, you've talked about the ZSE being affected by the zinc liquidity, which is a function of the country, the economy. And you talked of listing and delisting being a function of the economy and retail. So given that you have become the Minister of Industry and Commerce, which policies do you think they need to be twisted to support the overall economy?
Okay. I think the way we look at it, as I said, is if you look at the Zimbabwean economy, let's step back a little bit, it's growing at 6%, right, despite retail struggling. So there are other sectors that are doing well. So it's not like the whole country is not doing well. There are other sectors that are doing well. So our job as the exchange is to attract those sectors that are doing well. So we have to attract mining. That's important for us. That's why we're saying we're doing work to mine. Property is doing well. So you have to attract property. That's how we look at it. You have to attract the sectors that are winning to come onto your exchange. That's how we look at it. The police and everything, you can lobby, but we don't have that under our control. What we have under our control is to look at, say, which sectors make sense to come onto our platform and therefore market. That's how we look at it.
Well, that's wonderful. Thanks, Bgoni. Right, okay, study time. Okay, very wonderful. Okay, thank you very much.
That concludes our special focus from addressing liquidity challenges to laying the foundation for innovative initiatives like Bitcoin trading. ZSE's strategy charts a promising course for Zimbabwe's financial markets. Join us next time for more exclusive insights into the forces driving Africa's markets.